Good afternoon, traders. This is Michael coming to you from Game Edge with our midday recap review of what we're seeing with the price action. First, I want to look over the web app that we were looking at this morning in our pre-market SPX game plan pre-market prep. We were discussing within our commentary. I'm not sure exactly what the pre-market prep. Hey, Will, how are you? But these transition areas. We are the only service that we know that provides these transition areas here at Game Edge. And these transition areas are extremely important. Basically, you're delineating between a transition within the overall SPX option structure from positive gamma, call dominated, to negative gamma, put dominated overall structure. We have a few other tools we look at to differentiate. But these transition areas are extremely important. When you start moving below these transition areas, we'll look at the SPX price action here in a minute on the trading view chart. But when you start moving through these areas, this is when the overall sentiment structure starts to change. So you get below 67.30. That was an important area, obviously, and then moving down towards 67.10, 67.15. You'll see the largest, the GEX transition here, and then the DEX transition here. And as we were stating this morning, once these transitions are a little bit wider pre-market, that just basically lets us know that there's some uncertainty from market participants on positioning and directionality, right? So when we start to see these transitions widen, you can go back and look at other pre-market preps. You'll notice that they were only five wide strikes. This is a fairly wide transition, 15 strike wide for GEX and DEX transition, and then our drunken sailor range. 67.15 to 67.50. It's usually fairly wide, but the DEX and GEX transitions were 15 wide, and usually they're only 5. So it gives us the unambiguous if-then statements of being above transition or below transition. Same thing for today, above transition or below transition. So once you get below transition, obviously we're a little bit more cautious and entering a little bit more put-dominated negative gamma environment. And then you want to see those transitions recover. The other thing that I wanted to discuss was our market trend model. Yesterday, it was trending fairly sideways without much appreciation in the overall tick, and obviously we're making lower lows within the tick. You could actually draw a trend line here if you wanted, but you can see that each one of these are lower lows within the tick. So the tick basically is stating buying versus selling within the overall market. So there was some weakness starting to creep in via the tick, which is our market trend model. And this is how we position for a shorter term basis as well as the longer term positioning. And this also gives us our triggers for our P-trans to PX as well as our wheel strategy, which are mechanical portfolios. So we'll go ahead and look at the ARC. It was weakening actually a little bit worse than what the tick US was. And once we move below these shorter term moving averages, or what we call the railroad tracks, we move to a more cautionary stance. So yesterday into the close, we would have been slightly cautionary at the close, and if you were in long positions or open new long positions, most likely you probably needed to trim your risk a little bit. Now, look at this on another day as the tick closed well above the the railroad tracks, as well as moving from lower left to upper right, indicating significant amount of buying in the overall market. So this was weakness yesterday, and then the close was below the moving averages. So if you were in a swing trade that you just opened yesterday, most likely you'd want to clean that up at the close, start managing your risk appropriately. And then this morning, very early on, we started actually at the close there yesterday, and then very early on this morning, we started in a linear down fashion. So if you were long from yesterday, you would be closing your overall longs and then looking to get short the overall market on a shorter term basis for a weak move to the downside. So let's go ahead and look at the trading view chart. I just updated my script from this morning. So obviously 67.50, that was that plus GEX level right at the open today. And you can see the rejection there. And then basically we've continued all the way to the downside and pulled right back to P-trans. And obviously holding above P-trans is extremely important. This is all expiries from this morning. 6,700 round Livermore level. So extremely important area for us to hold moving forward. We'll look at our vol-m command here in a minute. That basically tells us how intraday market participants are positioning. But as you know, P-trans to PGEX is our mechanical portfolio, and historically we see profit taking at plus GEX, or what we call PGEX. This is just the highest local peak, where historically from our back testing we see profit taking. and that's what you saw this morning. And then just a pull all the way down to the downside. Same thing with the SPY. Obviously, we opened significantly above plus GEX. Historically, we do not close for a significant amount of time above plus GEX unless the structure continues to move up. And then we started moving below plus GEX COI, and then you saw some weakness down toward P-Trans, and that's usually where we see a bounce as positive transition area if we're going to be able to maintain this overall structure and possible move back to the upside. So let's get to a few of our other tools. Obviously, we've already looked at the web app. Our vol command indicating negative slopes in the call and put centroids. This is just indicating that market participants are transacting. The large mass of volume is transacting to the downside. But you can see what happened roughly around 12 o'clock, right? We stopped making lower lows in the put centroid, so that's indicating that market participants were not transacting lower strikes or targeting lower strikes with out of the money put speculation, so that kind of shut the flow off to the downside. And then we've just seen the call centroid just cruising to the downside, indicating market participants are not transacting speculation to the upside. So you'd expect weakness, and then you'd expect some flattening as we've watched these call centroid and put centroid start to flatten out. And then SPXP web app here again, we can click and view. We've moved to a put dominated state since that spot prices moved through the transition areas, and now we're well below the transition areas. So we'd look for a rejection at the bottom of transition as we move up towards the transition area. But moving to that put dominated state very quickly at the open, that should have been an indication that we were probably going to see some more weakness, at least intraday. And then we came down towards the 6,700 level, which is a key gamma delta level, as well as around Livermore level, and just a large concentration level that we'd watch for an overall bounce. So we'll watch for a move back to the upside, spot price back towards 67.15. That first area we'd need to get over is 67.30. So we watch for a rejection at the bottom of the transition area. If we do get through transition, most likely going to be difficult to move to the upside. We have a significant amount of in the money puts overhead with charm. I can look at our net stack command. This will help you quantify it, and we can talk about that here in just a minute. Let me know if there's any single stocks anybody wants to go over. We can review those. So here's our net stack command for the day. So now we're in the money calls, 67.05. These will continue to be supportive as long as we're above that level. And then we have in the money puts overhead. These are almost 2x in the money calls. So this in the money calls or in the money puts will be difficult to move overhead. And you see the out of the money calls winning the battle via the charm. So again, those will continue to grow overhead as they decay towards zero. So those will most likely be a headwind at 67.45. That closely matches 67.30, but it also matches the other side of the transition area at 67.45, and then we have COTMC. So not likely that we move significantly higher into the afternoon. Cap on price would most likely be 67.30 up towards 67.45. So that will be what we watch for. So, okay, we'll look through those, Will. Yeah, so, basically we had a couple things coming in that we were watching. Weakness in the market trend model. We watched vol M at the open for our members through the morning, and obviously those were indicating to the downside, so you want to be on that side of the overall market, at least for this morning. So we'll look through NVIDIA here. So call dominated above and below spot price on NVIDIA, a little bit wider transition. This expiry is call dominated, so everything looks good for NVIDIA. We are within the overall transition area, so obviously that would indicate a little bit of difficulty. If we get above transition, we'd be looking for 195. That's PGEX and COI, so highest local call open interest as well as plus GEX, and that's COTMC. So 195 would probably be capping price. And then on to the next expiry, 195, the structure doesn't advance much. So 195 would be where I'd be looking for NVIDIA. If the market cooperates, a pullback to transition is a good area to get involved in, as long as the market trend model and the overall sentiment structure stay intact. So Oracle call dominated, 300 to the upside, PGEX, COI. We're well below transition now, so that's a little bit more cautionary, a little bit more weak-ish look. 300 PGEX, COI to the upside. We're below transition, COTMP 275, so I'd anticipate COTMP to hold. But difficult for price appreciation for Oracle into this expiry, and put dominated on next expiry. So weakness continues in Oracle for the next couple expiries there. So if the market was moving up, Oracle would not be the first one that I would go with. I'd go with NVIDIA. CoreWeave, call dominated, very wide transition though. That's some uncertainty within the overall market participants. Let's look at this. 145 is PGEX, 150 COI, well below a wide transition though, so it's going to be difficult for price appreciation. For CoreWeave, you can see just a puts overhead, put dominated, and a significant amount of out of the money put speculation to the downside, well below spot price too. So I would look for a little bit more weakness in CRWV, most likely, at least through this expiry. Next expiry, we do move to call dominated, so a lot of those puts are being removed, but wide transition, 145 PGEX COI to the upside. So yeah, absolutely, Will. Thanks for joining us. Not sure I've seen you on here very much, but yeah, thanks for joining us. Happy to go through these. I start to get the regulars that I see coming through on our live stuff. So 6,700 continues to hold for SPX. That's going to be a key area. ZeroGex 6695, and then COTMP 6688. IWM a little weaker. It's below P-Trans. Qs kind of oscillating around P-Trans. So IWM's a little bit weaker to the downside. So let's take a look at our latest volume command here. So here's our centroid bar chart to review. Obviously, you can see the downside on the put slope as well as the downside on the call slope, but the put slope continues to pull that nose up and rise. So it's indicating market participants are not transacting more out of the money puts to the downside. So again, that's why the overall market most likely stopped going down. And then we'll look at our latest volume with our linear fit lines. There you go. So as you can see, I like to look at the call centroid or the put centroid, which is the bolded red line, and we're not making lower lows. We're really just kind of hovering around 66.80 roughly, and then you see spot price really stopped around 6,700. We actually see the call centroid kind of flattening out a little bit too. So if this call centroid starts turning back to the upside, indicating out of the money call speculation to the upside, then I'd most likely look for spot price to continue to accumulate to the upside. So. All right, thanks everybody for joining us. Everybody make it a great afternoon. We'll see if we can post some volume charts or MTM charts into the afternoon market trend model. But as of now, weakness creeping in via the market trend model. So we'll continue to watch this. Need to see that move back above the shorter term moving averages as well as the railroad tracks. So, all right, thanks everybody for joining us. Make it a great